The satellite images don't lie. Right now, at this very moment, a massive freight train is crossing the desert borderlands between Kazakhstan and Turkmenistan, carrying billions of dollars worth of goods that Western powers desperately wanted to stop. Its destination? Iran? Its origin? The industrial heartland of China. And what makes this particular journey so explosive is that it represents something far bigger than a simple trade route. It's a deliberate challenge to the most powerful economic sanction system ever created, a chess move that's redrawing the map of global power, and a partnership that has Western intelligence agencies working overtime to understand just how deep this alliance really goes. Picture this. It's May 25th, 2025. A Chinese freight train loaded with solar panels pulls into the Aprin dry port near Tehran. The journey took just 15 days. 15 days to cross thousands of kilometers through some of the most geopolitically sensitive territory on Earth. Now, you might be thinking, so what? Countries trade with each other all the time. But here's what makes this moment absolutely critical.
Before we go further, I need to be clear about something. What you're seeing here is only the public layer of this story. For channel members, I break down what happens next, the timelines decision makers are actually working with, and the scenarios that won't be discussed openly. If you want access to that deeper analysis, you can join the channel by clicking the Join button below.
That train journey slashed the traditional shipping time by more than half. Goods that used to take 30 to 40 days by sea now arrive in just over 2 weeks by land. And this isn't some experimental route or one-time publicity stunt. This is the official launch of a direct rail link between China and Iran. But the story gets even more intriguing when you follow the money. Because while trains are rolling across Central Asia and oil tankers are moving through the Persian Gulf, there's an entire shadow financial system operating in the background that most people have never heard about. Western officials estimate that in 2024 alone, around $8.4 billion in oil-related payments flowed through a covert network that connects Beijing to Tehran without touching a single Western bank. $8.4 billion, moving invisibly. And that's just what they know about. The real number could be substantially higher. Let's rewind for a moment and understand how we got here, because this story has layers that go back decades, but the current chapter really accelerates in 2018. That's when the Trump administration pulled the United States out of the Iran nuclear deal and reimposed what they called maximum pressure sanctions. The goal was simple and brutal. Crush Iran's economy by cutting off its oil exports. Drive Iranian oil sales from about 2.2 million barrels per day down to zero. Force the regime to either collapse or come begging back to the negotiating table. On paper, it was a strategy that should have worked. After all, oil exports are Iran's economic lifeline, accounting for the majority of government revenue. Cut off the oil, cut off the money, and the regime would have no choice but to bend. But something unexpected happened. Or rather, somewhat unexpected stepped in. China, the world's largest importer of crude oil, a country with an insatiable appetite for energy and a growing willingness to challenge American economic dominance. And most importantly, a nation that saw in Iran's desperation an opportunity too valuable to pass up. Because when everyone else is running away from a seller, you can negotiate incredibly favorable terms. And favorable is putting it mildly. Iranian crude oil currently trades at a discount of $8 to $10 per barrel below global benchmarks. For a country importing over 1.38 million barrels per day from Iran, that discount adds up to billions of dollars in annual savings. Billions. It's like getting a permanent sale price on one of your most critical resources. As of 2025, China is now importing more than 80% of Iran's total oil exports. Let that sink in for a moment. 80%. That's not just being a major trading partner. That's being a lifeline. Without Chinese purchases, Iran's economy would be an absolute freefall. The Iranian rial is already in crisis, inflation is crushing ordinary citizens, and protests are erupting across all 31 provinces. But as dire as things are, they would be catastrophically worse without that Chinese cash flowing in, and Beijing knows it, Tehran knows it, and most importantly, Washington knows it. But here's where the story takes a turn into something almost cinematic in its complexity. Because moving oil from Iran to China while under American sanctions is not like ordering something online and waiting for delivery. It requires an elaborate system of deception, misdirection, and parallel infrastructure that operates in the shadows of the global economy. Enter what intelligence analysts call the dark fleet. These are oil tankers that have essentially gone rogue. They turn off their transponders to avoid detection. They engage in ship-to-ship transfers in international waters, moving oil from one vessel to another under the cover of darkness. They operate without proper insurance or registration with international maritime authorities, and they rebrand Iranian oil as something else entirely. Here's how it works in practice. Iranian oil gets loaded onto these dark fleet tankers in the Persian Gulf. The ships then sail to international waters off the coast of Malaysia or Singapore. There, in the dead of night, they transfer their cargo to other vessels. Suddenly, Iranian oil becomes Malaysian blend or gets mixed with crude from other sources to obscure its origin. These ships then proceed to China, where they're welcomed at ports, and the oil is purchased by what are called teapot refineries. These are small, independent refineries clustered mainly in Shandong province. They operate on razor-thin margins, and they're willing to take risks that the big state-owned Chinese oil companies won't touch, because those major companies learned their lesson back in 2018 and 2019. After the sanctions hit, they largely stopped direct imports from Iran to reduce their exposure to American penalties. But the teapots? They're smaller, harder to track, and they've absorbed about 90% of Iran's total oil exports since the big players stepped back. Now, if you're thinking this sounds like something out of a spy thriller, you're not wrong. But wait, because the financial side of this operation is even more sophisticated. Remember that $8.4 billion we talked about earlier? That money doesn't flow through normal banking channels. It can't, because Western sanctions have effectively cut Iran off from the global financial system. Iranian banks can't access SWIFT, the international payment network. They can't clear transactions in dollars or euros. So China and Iran have built something entirely new, something that operates completely outside Western oversight. At the center of the system is an entity called Chaina. It's not listed among China's officially registered banks. It's not subject to the same regulations or transparency requirements. But it's moving billions of dollars from Chinese oil buyers to Iranian sellers. And it is doing so in a way that Western intelligence agencies are still trying to fully map out. Here's the basic structure. Chinese companies buy Iranian oil. Instead of paying Iran directly, they transfer funds to Chaina. Chaina then funnels that money to Chinese contractors who are working on infrastructure projects inside Iran. These projects are insured by the same state-owned enterprise that sponsors the oil deals. It's a circular system. Oil money becomes infrastructure investment, which generates more economic activity, which creates more demand for oil, which generates more money to invest in infrastructure. It's a closed loop that operates entirely in Chinese yuan, completely bypassing the dollar-dominated global financial system. And the infrastructure projects themselves? They're not small-scale developments. We're talking about airports, refineries, transport systems, and bridges. The Persian Gulf Bridge, for instance, connects Iran's Keshem Island to the mainland. It's a massive engineering project partially funded through these oil-for-infrastructure swaps. Then there's the rail network expansion. Iran has been systematically upgrading and extending its railway system with Chinese financing. The goal is to reach 25,000 kilometers of track by the end of this decade, more than double the length that existed in 2018 at a cost of $25 billion. Chinese state-owned enterprises are providing the financing and much of the construction expertise, paying in Chinese currency rather than dollars or euros. But the most strategically significant development is that direct rail link we mentioned at the beginning, the one that launched in May 2025. Because that rail corridor isn't just about moving goods faster or cheaper. It's about creating alternatives to the maritime routes that the United States and its allies have controlled for decades. Think about global trade for a moment. The vast majority of it moves by sea, and those sea routes pass through a handful of critical choke points. The Strait of Hormuz, where about 20% of the world's oil supply transits. The Strait of Malacca, the main passage between the Indian Ocean and the Pacific. The Suez Canal. These are the arteries of global commerce, and they're all vulnerable to disruption. A naval blockade, a military conflict, or even just political pressure can shut them down or make them too risky to use. China has been acutely aware of this vulnerability for years. It's sometimes called the Malacca dilemma, the fact that so much of China's trade, especially its energy imports, has to pass through a narrow strait that could be blocked by hostile naval forces. So Beijing has been investing heavily in alternatives, overland routes, rail corridors, pipelines, infrastructure that can't be easily interdicted by naval power. And Iran, with its strategic location bridging Central Asia, the Middle East, and the Persian Gulf, is absolutely critical to this vision. This is where China's Belt and Road Initiative comes into the picture. If you're not familiar with it, the Belt and Road Initiative is arguably the most ambitious infrastructure project in human history. Launched by President Xi Jinping in 2013, it envisions a vast network of roads, railways, ports, and pipelines connecting China to markets across Asia, Europe, Africa, and beyond. Over 140 countries have signed up in some form. Chinese investment has exceeded $110 billion. And Iran, despite being under heavy sanctions, is a flagship partner in this initiative. The 25-year Strategic Cooperation Agreement, signed between China and Iran in March 2021, is the formal framework for this partnership. The details of the agreement haven't been fully disclosed, but leaked drafts and official statements paint a picture of staggering scope. China is expected to invest up to $400 billion in Iran's economy over the 25-year period. $400 billion. That's not a typo. About $280 billion is earmarked for developing Iran's oil, gas, and petrochemical sectors. Another $120 billion is designated for upgrading transportation and manufacturing infrastructure. In exchange, China gets a steady supply of heavily discounted oil, privileged access to Iran's natural resources, and a strategic foothold in one of the world's most geopolitically important regions. The timing of all this is crucial, because while China and Iran have been deepening their economic ties, the geopolitical landscape has been shifting in ways that make this partnership even more significant. Russia's war in Ukraine has led to its own economic isolation and sanctions. North Korea remains heavily sanctioned. These three countries, Iran, Russia, and North Korea, have increasingly been coordinating their efforts to circumvent Western economic pressure. They're sharing tactics, creating parallel payment systems, and supporting each other's evasion networks. China sits at the center of this emerging axis, not necessarily out of ideological alignment, but out of pragmatic self-interest. Russia, after facing its own oil price cap imposed by the G7 in December 2022, adopted many of Iran's methods for exporting sanctioned oil, the same dark fleet tactics, the same ship-to-ship transfers, the same obscuring of origin, and much of that oil, like Iran's, ends up in China. So now you have Chinese refineries processing discounted crude from multiple heavily sanctioned countries, saving enormous amounts of money, but also creating a massive headache for Western sanctions enforcement. Because every barrel of sanctioned oil that China buys undermines the effectiveness of those sanctions. It provides revenue to regimes that Western powers are trying to pressure. It demonstrates that the sanctions aren't airtight. And it emboldens other countries to test the limits of what they can get away with. The Western response has been to double down. In early 2025, the Trump administration reimposed maximum pressure sanctions on Iran, specifically targeting the shadow fleet of tankers and the facilitators who make this trade possible. They sanctioned Chinese teapot refineries. They went after port operators. They blacklisted individual ships and companies. And then in January 2026, President Trump took the dramatic step of announcing 25% tariffs on any country doing business with Iran. 25%. That's not a subtle nudge. That's an economic hammer, and it's aimed squarely at China. The Chinese response was swift and defiant. The Chinese embassy in Washington issued a statement condemning what it called illicit unilateral sanctions and long-arm jurisdiction. China's foreign ministry spokeswoman said there are no winners in a trade war, and that China would resolutely safeguard its legitimate rights and interests. But beyond the rhetoric, China's position is clear. It views its trade with Iran as a sovereign decision, not subject to American approval. It sees the sanctions as an illegitimate exercise of American power, and it's willing to push back, even at the risk of economic conflict with the United States. But let's zoom out for a second and look at what this all means for the broader global order. Because what's happening between China and Iran isn't just about oil and railways. It's about the future of how international trade and finance work. For decades, the United States has been able to use its control of the global financial system as a weapon. If you wanted to do international business, you needed access to dollars, to American banks, to the SWIFT payment network. And if the United States didn't like your behavior, it could cut you off. That threat was incredibly powerful. It gave Washington enormous leverage over other countries' foreign policies. But what China is demonstrating, along with its partners, is that alternatives are possible. You can build parallel financial systems using other currencies. You can create trade routes that don't depend on American-controlled choke points. You can organize entire supply chains and payment networks that operate outside Western oversight. It's not easy. It's more expensive and less efficient than using the established system. But it's possible. And as more countries see China successfully defying American sanctions, the calculus starts to change. If you're a developing country looking at this situation, you might start wondering whether aligning with Washington is really your best option. Especially if China is offering investment, infrastructure, and trade deals with no political strings attached. Now, let's talk about the human dimension of this story, because behind all these billions of dollars and geopolitical maneuvering, there are real consequences for real people. In Iran right now, the economy is in shambles. The real has lost more than 90% of its value over the past decade. Inflation is rampant. Basic goods are increasingly unaffordable for ordinary citizens. Beginning on December 28, 2025, massive protests erupted across all 31 of Iran's provinces. These weren't primarily political protests about the regime's ideology or foreign policy. They were economic protests. People desperate because they can't afford food, medicine, housing. And while Chinese money is keeping the Iranian government afloat, it's not trickling down to improve the lives of average Iranians. If anything, the regime is using that financial lifeline to maintain its grip on power rather than to address the economic crisis affecting its population. On the Chinese side, the situation is more complex. Those teapot refineries in Shandong province employ thousands of workers. They're keeping local economies going. The cheap Iranian oil helps keep energy costs down for Chinese industry, which makes Chinese manufactured goods more competitive globally. But there are risks too. Chinese companies doing business with Iran are exposed to potential American sanctions. If Washington decides to get really aggressive, Chinese banks, tech companies, or manufacturers could find themselves cut off from Western markets. That would be economically devastating. And there's always the geopolitical risk. If tensions between the United States and Iran escalate into military conflict, Chinese investments and personnel in Iran would be at risk. Speaking of military conflict, that's been a real possibility recently. In June 2025, Israel launched a surprise air offensive targeting Iranian military and nuclear installations. Iran retaliated with rockets and drones. The United States joined in with airstrikes on Iranian nuclear facilities. For about 12 days, the Middle East teetered on the brink of a wider war. China's position throughout this crisis was revealing. Chinese Foreign Minister Wang Yi repeatedly called for de-escalation and condemned the strikes as violations of international law. China's permanent representative to the United Nations reiterated in January 2026 his country's categorical rejection of military action against Iran. But notably, China didn't offer Iran any significant military support, no air defense systems, no troops, no direct military intervention. Because China's interest in Iran is primarily economic and strategic, not ideological, Beijing doesn't want to see Iran's regime collapse because that would destabilize the region and threaten Chinese investments in energy supplies. But Beijing also doesn't want to get dragged into a shooting war with the United States and Israel. This brings us to one of the most fascinating aspects of this entire situation, the delicate balancing act that China is attempting. On one hand, Beijing is openly defying American sanctions, building deep economic ties with Iran, and creating alternative systems that challenge American financial dominance. On the other hand, China is trying to maintain productive economic relations with the United States and its allies. Chinese leaders still want access to Western technology, Western markets, and Western investment. They don't want a complete rupture, so they're walking this incredibly fine line, pushing back against American pressure in some areas while trying to avoid a full confrontation. But that balancing act is getting harder to maintain. The 25% tariff threat from Trump is a significant escalation. If it's actually implemented and enforced, Chinese companies will face an impossible choice. Stop doing business with Iran and lose access to cheap energy in a strategic market, or continue trading with Iran and face massive tariffs on all their exports to the United States. Given that the United States imported more than $500 billion worth of goods from China in 2024, those tariffs would represent a huge hit to the Chinese economy. And it's not just the tariffs. In September 2025, the United Kingdom, France, and Germany triggered what's called the snapback mechanism, which reimposed United Nations sanctions on Iran related to its nuclear program. These sanctions target Iran's nuclear and missile production and are supposed to be adhered to by all UN member states. But Russia immediately announced it doesn't recognize the restored sanctions, and China said countries should stop pushing for sanctions against Iran and inciting confrontation. So now you have the situation where some major powers are trying to increase pressure on Iran through sanctions, while other major powers are actively undermining those sanctions and declaring they won't comply. This isn't just a disagreement about policy, it's a fundamental fracturing of the international system that was built after World War II. That system was based on the idea that major powers would work through international institutions like the United Nations to maintain order and resolve disputes. When permanent members of the Security Council are openly defying each other and going their separate ways, the whole architecture starts to crumble. And Iran is capitalizing on this fracturing. Tehran is actively positioning itself as a critical transit hub connecting multiple regions. The railway connection to China is just one piece. Iran is also developing what's called the International North-South Transport Corridor, which would link Russian ports on the Caspian and Baltic Seas to the Persian Gulf and India. The eastern branch of this corridor would run through Iran and Afghanistan. Iran is improving its relations with Central Asian countries like Turkmenistan, Tajikistan, and Uzbekistan, offering them access to Iranian ports like Chabahar and Bandar Abbas. Landlocked countries in Central Asia are extremely interested in this because it gives them a route to international waters that does not depend on Russia or China alone. In January 2025, Iranian President Masoud Pezeshkian visited Tajikistan and signed 22 memorandums of understanding covering infrastructure and trade. This was significant because relations between Iran and Tajikistan had been cold for decades. But now, as part of Iran's pivot toward deeper integration into Eurasian trade networks, Tehran is actively courting these partnerships. And on May 12, 2025, just days before that first freight train arrived from China, senior railway officials from Iran, China, Kazakhstan, Uzbekistan, Turkmenistan, and Turkey met in Tehran to discuss the development of a transcontinental rail network. Think about the implications of that meeting. Countries spanning from East Asia to Europe, coordinating on infrastructure that would create new trade routes largely independent of Western control. The Incheborn Free Trade and Industrial Zone in northeastern Iran has already surpassed 3 million tons in annual rail transit, emerging as a strategic hub along the north-south corridor. It's connecting Russia to India and China via the Turkmenistan border. As the trade war between the United States and China continues and maritime routes become increasingly volatile, China is turning more decisively toward these overland alternatives. And Iran, despite all its problems, despite the sanctions, despite the protests and the economic crisis, is managing to make itself indispensable to these new trade networks. Here's what makes this moment in history so critical. We're watching the emergence of what some analysts are calling a multipolar world order. For the past 3 decades, since the end of the Cold War, the United States has been the unquestioned superpower. American military might, American economic dominance, American cultural influence, the dollar as the global reserve currency, all of this created a world where American preferences largely shaped international outcomes. But that era is ending, not because America is collapsing, but because other powers are rising and they're increasingly willing to chart their own courses. China's economy is now comparable in size to America's, depending on how you measure it. China's military, while still not as powerful as America's, is growing rapidly and is more than capable of projecting power in its own region. And most importantly, China is demonstrating that you can be economically successful, politically influential, and strategically powerful without adopting Western political systems or following Western rules. That's the real challenge to the existing order. Not military threat, although that exists too, but the ideological and systemic challenge. The idea that there are alternative models, alternative ways of organizing economies and societies and international relations. Iran is a test case for this emerging order. A relatively small country, economically struggling, politically isolated by Western powers, should by conventional logic be forced to submit to Western demands. But with Chinese backing, Iran is surviving. More than surviving, it's actually expanding its regional influence and its connectivity. If Iran can withstand maximum pressure sanctions with Chinese support, what does that mean for the effectiveness of Western coercive tools? What does it mean for other countries who might be thinking about challenging Western preferences? The European position is particularly interesting here. European countries are theoretically aligned with the United States on Iran policy. They support sanctions. They backed out of the nuclear deal after Trump withdrew. They triggered the snapback mechanism to reimpose UN sanctions. But European trade with Iran continues. Germany, despite being a close American ally, had about $1 billion in trade with Iran in 2025. The United Kingdom, which also strongly supports sanctions, still had £420 million in trade with Iran in the year ending June 2025. European governments say they support sanctions-compliant trade, but the reality is that many European companies are finding ways to maintain commercial relationships with Iran because there's money to be made. This gets to a fundamental tension in the global economy. Countries impose sanctions for political and security reasons, but businesses want to make money, and if there's a profitable opportunity in a sanctioned country, some companies will find ways to exploit it, especially if they think they can avoid getting caught or if the penalties aren't severe enough to outweigh the profits. China isn't unique in this regard. It's just operating at a scale and with a level of state backing that makes it impossible to ignore. As we move deeper into 2026, several key questions loom large. First, will the United States actually implement those 25% tariffs on countries trading with Iran, or was that an opening negotiating position meant to extract concessions? If the tariffs are implemented, how will China respond? Will Beijing back down and reduce its Iranian trade to avoid the economic pain, or will it retaliate with its own tariffs and accept an escalating trade war? Second, can Iran's regime survive the ongoing domestic protests and economic crisis, even with Chinese financial support? If the regime falls, what happens to all these Chinese investments in infrastructure projects? Third, how will the situation in the Middle East evolve? If military tensions between Iran and Israel or Iran and the United States flare up again, will China be able to maintain its neutral mediator posture, or will it be forced to choose sides more explicitly? And perhaps, most fundamentally, can the West develop an effective response to this China-Iran partnership? Or are we watching the emergence of a parallel global economy that operates largely outside Western influence? Because that's really what's at stake here. For decades, Western powers, led by the United States, have used their control of global financial systems and trade routes as tools of statecraft. If countries want to prosper, they play by Western rules. But China is showing that you can opt out of that system, build alternatives, and still succeed. It's more difficult, it requires massive investment and political will, but it's possible. Some Western officials are now talking about the need to offer developing countries better alternatives. Infrastructure investment without the debt traps that sometimes come with Chinese loans. Trade deals that are more favorable. Technology transfers. The Biden administration launched something called Build Back Better World, or B3W, which was supposed to be a Western answer to the Belt and Road Initiative. But the scale of funding hasn't come close to matching what China is putting on the table. And developing countries are pragmatic. They'll work with whoever offers the best deal and asks the fewest questions about domestic politics. What we're witnessing unfold between China and Iran is more than a story about sanctions evasion or oil trade. It's a story about the fundamental restructuring of global power relationships. It's about whether the rules-based international order that emerged after World War II can adapt to a world where multiple major powers have different visions and different interests, or whether we're heading toward a more fragmented world of competing blocs. It's about whether economic interdependence will continue to be the organizing principle of global affairs, or whether we'll see the world split into separate economic spheres that trade primarily within their own groups. The rail line from China to Iran that opened in May 2025 will be carrying freight for decades to come. The oil tankers moving through the Persian Gulf won't stop sailing. The shadow financial networks connecting Beijing to Tehran will continue operating and probably become more sophisticated. This isn't a temporary arrangement or a short-term workaround. This is infrastructure, institutions, and relationships that are becoming permanent features of the global landscape. And every barrel of oil that moves from Iran to China, every train that crosses those Central Asian deserts, every WAN that flows through those parallel payment systems, represents a small but real erosion of the system that the West spent 75 years building. The question that keeps intelligence analysts and policymakers up at night isn't whether China and Iran will continue trading, despite Western pressure. That question has already been answered. They will. The real question is what comes next. How many other countries will look at this model and decide it's worth emulating? How many will decide that Chinese investment and willingness to ignore human rights concerns is more valuable than Western approval? And ultimately, can the West compete in this new environment without compromising its own values about democracy, human rights, and rule of law? Because one of China's competitive advantages is that it doesn't care how its partners govern themselves domestically. There are no lectures about democracy or human rights attached to Chinese loans. That's appealing to a lot of governments who are tired of Western criticism. The story of China and Iran is still being written. Every day brings new developments, more sanctions, more countermeasures, more infrastructure projects, more trade flowing through new channels. And while the actors on this global stage are governments and corporations, the consequences will be felt by ordinary people everywhere. The family in Iran struggling with inflation, the factory worker in China whose livelihood depends on access to cheap energy, the American consumer who might pay more for goods if tariffs escalate, the European business trying to navigate conflicting regulatory requirements. This is the reality of 21st century geopolitics. Complex, interconnected, and increasingly difficult to predict or control. And somewhere right now, another freight train is preparing to depart from China, loaded with goods destined for Iran, ready to make that 15-day journey across a continent, carrying with it not just cargo, but the weight of a changing world order.